this trading strategy at 200 times and found it has an 89% win rate. First you want to go to TradingView. I'll leave a link in my bio. Then click the Indicators tab. First type in support and resistance levels with breaks. Make sure it's this one by Lux Algo, the settings as is on the default settings. Then we're going to add one more indicator called the trauma, for trend regularity adaptive moving average. Go to the settings of the indicator and make sure you change the length to 15. The strategy is pretty simple. You'll get your support and resistance lines plotted automatically thanks to the indicator. If the price ever breaks through the resistance with a certain volume threshold, you will get a buy signal like this. You would enter here. You exit the position when the trauma, the red line, starts decreasing in value, so you would have exited your position right here.
Sideways markets, prices move between support and resistance. Buy near support, sell near resistance, and repeat. It's simple and works well in choppy markets. Patience is key. Wait for clear signals before entering. Combining this strategy with volume analysis can improve accuracy. Follow for more trading tips.
This is the easiest support and resistance strategy you can use to make money trading. First, we need to understand what support and resistance is. Support is an area where price is unable to break lower, hence a support level where price is most likely going to bounce. On the other hand, resistance is an area where price is unable to break higher, meaning price is most likely going to reject. With that being said, this is how we can use this one simple support and resistance trading strategy. Step 1. Find a key support or resistance level. This means we have at least 2 to 3 touches, as we can see in this example. Step 2. Wait for a breakout of either side, and what we want to see is displacement. This means price breaks above or below the level with extreme strength. Step 3. We now wait for price to come back and retest that breakout level, and that's where we want to see the resistance now turn support for moves higher. Step 4. We now wait for confirmation to enter in with stops below the retest level and targets being that pivot high and above. And just like that, this is how we can use the support and resistance strategy.
Work. Most beginner traders, when they first start out, use support and resistance and use a rectangle tool to either mark out the support or the resistance. But as you can see, this doesn't always work. When I first started out using support and resistance, I knew that I needed confluence in my trading for it to work. That's why I focused on market structure, Fibonacci retracement, and then support and resistance.
This support and resistance strategy. Let's go! First, we open up TradingView, choose your pair and open it on the weekly time frame. Now we want to identify the trend. In this case it's a downtrend, forming lower lows and lower highs. Now we want to place our support and resistance on the weekly time frame. As you can see, we broke support and create a resistance. Same here, support, broke below, came back up, and we're currently trading at resistance. Now we go into the daily time frame. Choose the rectangle and mark the zones of interest. It is an area where price is currently trading at. Now we go down into the 4-hour time frame and draw the setup we will be waiting for. Once price reaches our area of interest, we go down into the 30-minute time frame and we wait for an entry signal. Here we have a beautiful evening star pattern. So now we enter the sell. Place our stop loss above the daily zone and the take profit to our last low. And then we wait. Here we could have another entry on a double top pattern. And we finally ended up hitting our take.
So you can build support and resistance levels using volume in under 30 seconds. So first, head over to this website, tradingview.com. Launch your chart and select any time frame you'd like. I'll go ahead and select the 15-minute chart. And now I'll go ahead and select indicators. And I'll go ahead and type in this indicator, fixed range volume profile, and go ahead and select it. Now I'll go ahead and select a range in time on my chart. And now instead of volume displayed by time, I have actually volume displayed by price. And now I'm going to go ahead and group together similar volume quantities like this, because these 4 are very similar. And all of these because they're very similar, and so on. And I'll do that for the rest of my chart. And now my chart looks something like this with all the volume groups. Now I'll remove the volume profile like that. And now I have pretty decent levels of support and resistance
in resistance. Step 1, use whole numbers and psychological levels, or use candlesticks where you see strong reactions of a support or resistance where buyers and sellers step into the market. So that would be identifying previous reaction points. Levels where you see price has bounced or rejected multiple times in the past. The more times that price has tested a level, the stronger it becomes. Step 3, use the daily 4-hour for the biggest levels to confirm your highest zones of support and resistance or supply and demand.
Strong historian logic behind the support and resistance levels. First, we should understand how support and resistance area levels being created. So I call this order block cycle, which if we get an order block that get failed and turn to the breaker block, and after this breaker block get mitigated, we're gonna have our strong and valid support and resistance area. So I'm gonna teach you how. So first of all, we know the order block, let's say in this case a bearish order block. It's the last buy candle before the bearish move, right? So if this order block get failed, which that means price didn't respect this bearish order block and create a break of market structure here, now this area from order block became a breaker block. Now here's the thing, we don't care if this breaker block get respected and go up or get failed, but in a case if this breaker block gets mitigated, now we have our valid support and resistance. So let's do a quick summary. We have the order block here, which didn't get respected. Then we have the breaker block, the breaker block area, which that's going to be order block failed, turn to the breaker block area. We get the mitigation from this breaker block area. It doesn't matter if price give us the reaction or failed this area. After the mitigation, this area for us is going to be support and resistance area, and price gonna react to this point of interest as SNR or support and resistance area. So simple. If you want to understand what is the support and resistance area, follow this.